Hi, I'm Keith McCullough, and welcome to another Real Conversation. I was just telling Mike T that he is now officially a celebrity in Hedgeye Nation. So I was in New York and I was in Boston for these ham events. Little known fact, but Mike Taylor actually came up with the name ham. And we might get into that because he's allowed to talk about the tickers probably, and I'm not. But lots of people, and I mean lots, looking forward to this one, so I can't wait.
Thank you.
Lots of ideas, and predictions. Your predictions were so good last time, I think they got banned.
They took them down. They're like, where's your bread? And the thing is, I didn't even make a copy of it because I literally just rattled it off on like January 1st.
Yeah.
And so I didn't make a copy of it. And then a few months later, they're like, where is this? And it's gone.
Yeah.
So somebody had taken a snapshot of it, fortunately. So I actually did get the original.
Yeah.
So.
Well, it's a very different year. It's not like you think about risk on a calendar basis, but there are some items that do have to happen at certain dates, right? So maybe we just start with Trump, because we have to. You know, like, I still can't believe that people don't believe that he has a plan to create negative catalysts or news flow in MSM and then be the catalyst to turn it. Like, how do you describe the game that he's playing?
He is the David Copperfield of presidents. That's really it. And it's great.
You like it?
Yeah, well, you think of it like this, though. You have to say, what Trump has gotten done in 1 year is mind-blowing.
Yeah.
What has happened in 1 year has, and really, I have to hand it also to Mark Rubio and Scott Bessent. That dynamic duo of the State Department and Treasury Department have changed the fabric of Earth in 1 year. And as you know, or we've talked about it many times, Scott believes that Xi, the leader of China, is the most dangerous person on Earth and they need to push that Politburo to push him out and have new guy come in. Mm-hmm. And it's happening. He's lost control of the military. They're on their own. He doesn't have his people in the military anymore. So no Taiwan event will happen. That would be suicide. But then
that's a big prediction. A lot of people don't have that on their card.
Well, it's sort of like I'm predicting a negative. Nothing will happen. But think of what happened here. Panama Canal, the front and the back end, in and out. No, they called and said, you're going to sell it to us. And that's it. And that's what happened. Argentina, gone. Venezuela, gone. Brazil, on the ropes. The whole BRICS with their own individual currency, gone. Russia, total dire straits. Syria, gone. Iran mullahs, almost gone. Soon to be gone. Nuclear threat to Iran, gone. Or to Israel, rather, gone. Hamas, gone. Gaza, flattened. Oh, and of course, trade has been turned on its head. You've seen the import-export numbers. We're having one way or another, we're having a renaissance, and that imports are starting to drop, exports are going up, and we're seeing the trade imbalance start to normalize, which is like unbelievably positive for GDP in the U.S. And incredibly terrible for margins in GDP for China, Japan, Europe. And I was just going through my GDP numbers, for instance, Trump. When you put in the new real estate thing that's coming, where you can borrow against your 401k in order to put the deposit down to get your home, I think that's going to add at least 1% to GDP. And we don't know the details yet. I have some, but it's all in the ether.
So you're very bullish on housing?
I'm actually very bullish U.S. consumer. Mm-hmm. I think we might be looking at like a 5% GDP number for this year. I don't know where your numbers are, but I look at it out, I back it out, and I'm like, I don't know how they do this.
Yeah, it's interesting. I mean, they're 3 to 4% with. You get more upside on a real basis the lower inflation goes. And now that we're seeing like absolute collapses in food prices, I mean, I was showing it today. I mean, everything from tea to potatoes, and gas prices have been low, so you have that. But if they're successful with this affordability on housing, I was just in Boston. A lot of people talking about that, and I say land bank
Oh, they are. Okay.
Yeah, but they don't really know. Like people don't know until they're told.
Yes.
Right? So how would you think of the midterms, the timing of that, and all these? It's a series of goodies, but including the deduction or the mortgage off the 401k. But land bank, do you think that that's like a big catalyst that's coming? The way the government could use all the owned land.
Well, think of it. Sure, I don't. That doesn't really move the needle for me.
No.
What does move the needle for me is 2 million people borrowing $100,000 out of their 401k.
That's huge. Yeah.
At 3% interest, because it's probably going to be angled towards the short end, right?
You can borrow for your first down payment on the short end. You think that they could do that?
Yeah, and that multiplier is going to end up being $1 trillion.
How are they going to who's going to underwrite that though?
That's the fine print that we have to find. Well, there's collateral, right? So you got the house and the 401k. So you do have a lot of collateral there. Mm-hmm. So it can be done. And I can't imagine the Congress is going to say, nah, no. And look, you think about that for M2. That's just M2. Dook. You're literally creating, now, 1 million people, $100,000 each. It's only $100 billion. It's not really enough to move the needle, but it's probably going to be more like 2+ million. And it's probably you have to think about the multiplier that gets factored on top of that, and all of a sudden you're kind of like, that's $1 trillion. Mm-hmm. That's like about 2% plus to GDP. Mm-hmm. Wow. And it's going to happen fast because the pent-up demand to transact in existing homes is large.
Like, I think you are bullish then on, well, obviously you're bullish on running the economy hot, right? Like most people think that there's no way out of this deficit, which both Republicans and Democrats have proven to be correct, unless you grow out of it. You can, if you run an economy hot, the question is how long can you run it that hot?
Well, until 2027 comps say hello.
Really, that's it.
And that'll be it. It's a classic Hedgeye. What do the comps look like? And then you dial it in, and 27 looks like a much, much, much more difficult moment.
So I say that too. Like the more correct we are on the first half of this year, the more worrisome the first half of next year is going to be. That's just the comps. It's the base effects.
Yes.
But a lot of people, man, like they start obviously with their politics. I mean, this most recent, last week it was the man with the white construction hat, oh, poor Powell. Futures are down because he said this about Powell. And then it's green. We're talking about like little things, but big reactions. Because a lot of people, if they start, when they look at their 401k or they start to look at, the future, they see a very negative outcome, like politically. Bill Gates, I think, just wrote in his annual letter that the world's going backwards. Maybe Microsoft's been a great short. Mr. Softy looks very soft. But that's going backwards. Some things are going backwards.
They had some really incredible comps.
But to see the Russell 2000 just relentlessly make new all-time highs. This is a racing start to the year.
Yeah, nobody's there.
Yeah, we'd have to be in a totally different paradigm where GDP is slowing and that's happening. That just doesn't happen. It's the most levered way to play GDP going from 2 to 4.
We're an incredibly rare event with the fourth turning and heft, for instance. I think that's your ETF for the ham.
I didn't say the ticker.
Ham.
Thank you.
No, but that's where you need to be.
Yeah.
Because I started talking about this when we came on during COVID for the first time, and thank you for having me on to help your viewers see it coming, how to trade it, how to get out of it, when to get out of it. And I was so terrified that because of the demographics, they wouldn't be able to stop spending. And here we are, we're 5 years later, and we're there. We're there where I can literally predict what Japan is going to do. And it's horrifying because they are going to have to and now they're just making up crap, right? Because you got demographics like this, and you can never have negative GDP because you have a debt bomb like this. So you can never have that happen. So they have to keep funneling in money no matter what. Yep. And the flows in their stock market are negative because everyone's aging out. And so you have to print more money to hold those assets up. And that's what we're looking at. And now the plan is, and this is why yields went blotto in Japan is because their new leadership is saying we're going to cut taxes and do more spending. And we've literally run out of stuff to spend on. We've already got the roads, tunnels, and bridges, and light switches, and daycare, and everything like that. What do we do? We're going to make guns, right? We're going to make a lot of guns because there's a person across the sea who we don't care for. And that's what they're just looking for, shit to fill that GDP gap. Now, this trade thing you saw with Trump, tariffs, has really, really hurt Japan because it has been that excess, materials they're sending out, they're exporting labor. And that's what's made the GDP whole. And now they have a giant hole in that. And so they have to spend more. And that's why you're seeing what's happening in the yields.
Yep.
And that is the biggest risk to my predictions for the year being very bullish, is that yields are the biggest risk, period.
Well, what's interesting about that is that people like certain macro tourist types thought, and they don't want to do business with Hedgeye, certain hedge funds that are going away because they thought, and by the way, as you know, JGB yields have been breaking out for like a year and a half. Now they've gone blotto. To your point, they're going up at a faster rate. But a lot of these people were short the Nikkei on that instead of being short the yen. Like we're short the yen, we're actually you'd be short JGBs and the yen. If you understand it, like Japan's going into a brief quad one because all their quad ones are brief.
Yes.
Takaichi's coming in. She's going to get Ueda to Skeletor. Remember Skeletor? She's going to get. He can go dovish, right? They've been relatively hawkish, and that's what you got. I mean, so shorting Japanese equities, even though the flows aren't there, has been a disaster for people. You have a lot of global equity markets are actually ripping people's face off.
It's very difficult, and the reason why I believe that's happening partially because of the quads, and you do have the comps, so you do have that setup. You do have a lot of efficiencies that are coming into the play, partially because they have to. The other part of it is going to be an AI component, but not in the way that people think. But I think it's simply robotics and so forth, that it's going to be able to make more widgets per person, which is something they really need to do. But the most important thing, in my view, is that they cannot possibly ever have negative GDP. And so they're going to print and make it up and lie to us and lie to everyone. And we really saw the beginnings of that lying going all the way back to like 2011 with the great Draghi lying through his teeth about the Eurozone and printing. And we saw it over here too, to a degree, post the catastrophe. What always cracks me up about 2008 is that it was about $1 trillion that was outrageous and bailed out the system, essentially around that. And that's a rounding. That's Elon's freaking salary. And that's where we're at right now, where the numbers are absolutely ridiculous.
Yeah, I don't think people understand how much that's actually fueled these CapEx, these AI numbers, is that it's all one big trade. Right? You're printing both fiscally and monetarily. The money in a closed system has to go somewhere. And that's where it went.
And go it must. So the U.S. has an out. The U.S. will end up opening up our doors to immigration. That's going to be our out. And maybe normalized in immigration with people coming in with skills and so forth. But the U.S. is able to do that. The other countries really can't because of language barriers, political barrier. In the case of Japan, xenophobia barriers. China, they're never going to import anybody. No one's going to go there. So all these other countries have this problem where their only solution is to issue debt and then print. And now we're kind of at the end of issuing debt thing because now they can't. And so it's going to be print. And that's, folks will say, oh, you're so doom and gloom, Mike, about this. And I'm like, no, it's just numbers. And there's trades to be had. There's fortunes to be made here. Just because we have a fourth turning heft end of the world event that's ongoing, and it's going to be slow at first until 27. 27, it's going to be real fast. That's my big year where I think it goes sideways.
If you think the world is ending, like I've been a big fan of the sun rising in the east thesis for a while. Like I've faded world ending trades, but on world ending, the latest end of the world day, which was Tuesday. I can't say the ETF that you just said, but it was up on the day. Because there are a series of things that if you're concerned about that, you should have in your portfolio. And a lot of them are growth. defense spending, the most obvious one.
Yes.
Like, look at some of these stocks. I mean, the metals and mining bull market makes AI, I always, like we say, makes it look like the JV team right now. I mean, right behind it, defense, robotics, to your point, space, there's a lot going on.
There's an awful lot.
So you can position for that and be bullish, but still have a demographic view that's bearish.
Yes, there's still fortunes to be made. Europe, we're probably going to see the municipal elections in France and the UK go the wrong way for the powers that be. And then that'll really accelerate for 27 when they have general elections. And I think this will be the first time that we have a really high probability that the far right, the National Front folks, are going to be able to form a coalition this time and take over France. And very shortly after that, the plan will be to leave the euro, go back to the franc. Take control, sovereignty out of the hands of Brussels. Mm-hmm. And that will be the beginning of the end of Europe.
It's like Brexit
and
part
the euro.
2.
But it's not the end when I say it's the beginning of the end. No, it's just a change. It's just a change. The world doesn't end. It just changes, and regimes change. But it's pretty funny because nothing actually changes in Europe. I mean, if you look at the top names in the DAX 25 years ago, it's the same top names. Nothing has changed. Whereas you look at it versus America, and it's changed like 6 times, the leadership and who's doing what. And they don't allow for, because they have a very tight political union, meaning that the establishment is the elite and they are there forever, and everyone else, need not apply. And that's the rest of the world. And that's how it works.
It's so arrogant.
The U.S., well,
unfortunately, my homeland imported that. They brought in Carney. Yeah. I mean, Carney, Bank of England. Okay, let's bring in this Goldman bureaucrat from Harvard Business School or whatever he did. He was actually a shitty goalie at Harvard. You see his speech at Davos, nobody cared. 15 minutes of why he's aligning with communists. Yeah, screw Trump. He is a certified, idiot in terms of street smarts. Like, if you're trying to reposition, your neighbor is the USA. And here's this guy who's not even a good guy. He's it's a good thing that people don't know everything that they could know about that guy. But you have they're all the same thing. They're all in the same speaking circuits. He's from that European circuit when the UK was essentially part of that whole cabal. And now they're not.
There's incredible Chinese influence in that circuit.
Yeah.
In that circle, whether they know it or not.
Well, they got big guys too.
Incredible money and influence.
They got Dalio.
Yes.
Right?
Well, yes.
I mean,
yes. But you think about it. What Canada's greatest asset is money laundering for Chinese. So,
you think so?
Yeah. I mean, their housing market.
Yeah, if you go, I'm not going to say what they call Vancouver, but that's yeah okay.
They launder money. I know people in real estate there that literally have left because it's over.
Yeah,
and that's so you started with Trump. Trump has had an unbelievable, and it's not going to stop because now it's Colombia, now it's Mexico, now it's Cuba, now it's Iran. Huge pressure on Canada. And it's absolutely remarkable what has been able to be done. And there's more, because we really haven't seen the red tape of regulation get removed. We haven't seen the effects of that.
Yeah.
And we're going to begin to feel that in the 2Q in a big way, when most smaller business owners are going to end up having a heck of a lot more cash than they thought. Because of that depreciation, everything. So anything that you acquired last year or built, put in place, you get to depreciate it in 1 year. Like, for instance, I'm involved with a dental business in Florida, and essentially everything that we have bought in the past year is going to make it. I do the numbers because that's what I'm good at on a cocktail napkin. I'm like, we don't have to pay taxes for 3 years on everything, and that's just me. And this is hundreds. This is probably about, we're going to be running $1 million more free cash flow than I thought because of it.
Yeah, it's interesting. I think most people that have, especially Trump's clowning MSM, but MSM is run by a bunch of yo-yos that live in absolute fear that the days of CNBC, like the lights might go off.
Yeah.
The insecurity's peaking. Most importantly, none of them have ever run or built a business. So they don't get like every line item that they're going after fully loaded with depreciation. I mean, if you're a capitalist and you could build a business in Canada or build it here, guess what I chose? And that was before it got where it's going. You know, so it's really interesting thing to watch, that people that don't actually build things other than clickbait platforms seem to know everything about what Trump's going to do, you know, wrong to our future. When, you know, small business, the Russell 2000 is a great proxy for that. Every single day, we could go through the entire slide deck, which you've already done. You know, NFIB, every single thing, small business surveys, everything's hooking higher, CEO confidence higher. And you got MSM is absolutely panicking.
Well, I mean, they are a piece of the money trail, and that's being found out very quickly now. Yeah. So we're having an incredible disruption in politics.
Do you think there's going to be like, there will be points of reckoning for the other side? I mean, Trump takes pretty good artillery every single, and again, I'm not some pump fan. I mean, I'm not,
and I am not either.
But
just easier to trade for me, which is great.
It's bananas. But
yes.
I mean, do you think that the other side's this year like imminently going to come under a lot more fire than
I would
Epstein
be very
stories?
surprised if Waltz, and others, Omar, Newsom, they make it to year end in their job, in their current job.
Really?
Yeah.
Why?
Yeah. Because if you follow the money, it becomes a huge problem, and how they became wealthy very quickly. Yeah. And I think that it becomes when everybody's involved. This is why we never saw the law going after it, is because everybody had a finger in it. And we'll find out, I think, a lot moving forward in a very short period of time. Mm-hmm. What's hard, though, is that, like any case, it's that you're like, oh, look at this fraud. And so you sending your investigators, you get the subpoenas, and then you find out there's actually 100 more charges and 1,000 more people involved. And so now it takes time, because you have to build that case. Yeah. And that's going to be the hard part, is building the case in time and not having them run out the clock. But I'm pretty sure it will. I think it's going to be an unbelievably political fireworks year.
That's interesting. I mean,
and you see how they're trying to line it up, where, for instance, ICE is like this renegade outfit that's in there, and now they're saying killing American citizens, right? That's the big thing. I mean, I got a funny data point for you. You'll laugh. Obama had far more deportations in his first year in office than Trump did.
Really?
Yeah, 400,000 versus about 250.
Wow.
Funny little fact. Don't recall the news media going bananas over that.
Yeah.
Because, for a lot of the mainstream media gets talking points and they comply.
Yeah. Well, without the mainstream media, you would not have the fourth turning. Like I say to this to people
You're
all
right.
the time, it's like, don't get upset about your kid going to a school where it's completely changed, and they're not going to have the experience that you did. Be excited that your kid's going to sit there and say, in principle, that's wrong. And I'm starting to get a little bit more angry incrementally. You can actually see it. It falls into our social zeitgeist. Like look at season 2 of Landman. It's basically all about that, right? Like the future isn't going to just give up on American capitalism, freedom as they know it, the independence of decision making, being yourself, whoever you are and however you do it. I mean, it's for Max and for Jack, like they're the same age, our sons. I think they're gonna go through some deep some deep fourth turning shit.
Things that we didn't.
Yeah, right. And they're gonna say, "Fuck this, man. I was raised differently."
I think I'm
seeing a lot of kids Jack's age want to go get in, go to Army, Navy, do things that really represent like kind of what they think is their patriotic duty. They don't give a shit about MSM. They don't even know what it is.
They don't know what it is, but they're angry.
Yeah.
And they should be angry. They should be angry, very angry. And I don't, the schooling that my children have had, and they're similar ages to your kids, maybe a touch younger in some cases, but, well, I should preface this, that both of my children have essentially been kicked out of their communist school at a young age, so, and which was nice. But I see uniformly the younger generation is very angry and cross with the establishment. And I don't mean boomers. What I mean is the powers that have a power over their destiny, school.
Yeah.
And they're very angry because they see that they are being taught a lot of nonsense. They know it, and they are not allowed to complain or voice anything, or they will be canceled. And that's the threat, and they hate it, really hate it, and they're angry. And they're bottled up.
You have one of your themes, correct me if I'm wrong, has to do with this, like the changing of the guard in education. Like there's a long and a short position, so to speak.
Oh, yeah. Well, there is. You see it. That's Link
Right.
Versus Grand Canyon University.
Are these tickers?
Yeah.
Okay.
Yeah, it's in my, is that the list there?
Yeah.
It's in those top
Oh,
lines.
LINC versus LOPE?
Yes.
So-
Link versus Lope.
So long technical schools, short colleges.
Yes.
That's a fourth turning one. The
If
fourth
I
turning
could be
goes-
short college, I mean, that's the way to do it. And this is, you know,
LOPE is, so that's the college?
yes, Grand Canyon University. Now, I'm not really picking on that one specifically. It just happens to be one of the tickers that are the publicly traded,
Right.
remote, you know. But if you have a hankering for a master's in Caribbean social justice, this is where you can get that degree.
Okay.
And that's the thing. You're spending all this borrowed money, guaranteed borrowed money off of, you know, from the government.
As opposed to being a hard-working American plumber,
Yes, or electrician.
who are highly paid,
I mean, oh yeah,
especially post these immigration rules.
yes. Yeah, that's what they say. And they call it, like, I have a friend who's that, and it's like wet work, and wet work, that's a plumber. And dry work means electrician. And so if you're into like wet work, you do plumbing and the other way, because they make about the same.
Yeah.
And it's really funny.
So you'll just have that on in your book as a long and a short. That's like a theme inside of your book. And
Yes.
I think a lot of people struggle with that because they'll be listening to this, will be like, come on, just ask Mike about TE. Like, they just want stock picks.
Yeah.
I mean, that's a boomer thing. That's a baby boomer thing.
Well, I mean,
our
everyone
kids are going to
wants
learn
do
how to
well.
build.
Hell, I want stock picks.
Yes.
Right?
But our kids, well, we have unique kids, but Jack and Max are going to know how to build a book.
Yes.
A long short book with hedges, with
Yes.
fourth turning embedded in it.
Yes.
Like that's how you do that. And I just want to make sure that people understand, like when you listen to Mike, like what you're really good at when you're in the seat. I mean, first of all, you are in the seat. I meant to show, look at Pink's, your performance, dude, is awesome. Like, I think we're allowed to show the chart.
Thank you.
It's like we're doing the same. Like I'm not allowed to talk about my tickers. He can't talk about his. But look at that thing. I mean, it's not even close. And for people that know what you went through, like personally, that is so awesome. Like that, without even being in your max capacity, which I think you are now, which is why now it's really breaking out.
Yes.
This is huge.
I've had some medical interventions that have been very successful.
But this is for a great cause, obviously. But the rotation that I'm seeing you make inside of that book. So your book, like when I say Mike's book, I mean his Pink ideas. They're not like the education long short Link versus Lope.
No, these are all healthcare, or 90% approximately will be healthcare in that book.
Right.
So, and that's my wheelhouse.
Yeah.
I'm just a healthcare guy.
Yeah.
Okay. So that's really the whole thing. But and look, I'd love to say I make a ton of money doing Pink, but as you know, it all goes to charity.
Yeah.
So I do it for zero, and I'm so thrilled that we can help breast cancer patients and cancer patients in general through the Susan G. Komen Foundation and deliver a return like that. And that chart, I think, is net of fees. That's a very low fee fund, 50 bips.
But you don't get paid the fees. What you get paid, what people should understand, just like me with my long-only portfolio that I show every day, it's the skin in the game. He owns PINK.
Yes, like that's how I got caught.
I get paid on PINK because my family's long PINK. You know, every single account has PINK. And it's really interesting to see, to watch, and this is why I think the ETF business is so exciting, is that you really compete with these slow-moving animals. Like, your performance is fantastic, but it is against some very slow-moving animals. They're not making the pivot you're making on UNH, for example, right now. They probably puked it to you.
Well, thank God.
Yeah.
I mean, that's our alpha.
Well, can you talk about that, like where a big weight becomes less of a weight, and how
Sure. Like in the case of UNH ran into some legal troubles, and they had some business issues that are very material, and the stock got cut in half.
Yep.
And PINK was probably a 90% underweight for that run when it got cut in half, and that helped PINK to the tune of about 200 basis points of outperformance, which is really material. And our peers didn't see it coming and are terrified of stepping outside of their benchmark weightings. And at PINK, we're not. We're here to make you money.
Yeah.
Oh, hell no. We're here to make me money, okay, more importantly, because I'm a large shareholder. So that's what we did. And then on the other side here, now it's a 5% weighting in the benchmark. It used to be 11.
11? And it got cut in half.
Yeah, and I think their business has actually improved an awful lot. I'm not sure about the legal issues that we'll have more color on in the back half of the year, but nobody is. So a lot of that's priced in. But what you have here is a name that is meaningful in the benchmark. It is starting to break out. I think the setup fundamentally for the company is very, very good for the year, and everyone's underweight. So we get to, go back and do it the other way.
Yep.
And so we will do that. And unlike many others, we'll be size when we see it. And here is kind of like the low-hanging fruit. We see it. And so that's why you'll see that I think that UNH might be 1,100 basis point weighting in the book, which is large, very large, very large. But it's unlikely. And I take a look at the comps. I look at how is everyone else set up. To a degree, I can see it, and nobody has that bet on. I'm like, okay, so I have an alpha mentally, with our micro research bottoms up. And then I also have a macro overlay, not that healthcare is really favored in quad one, but the macro overlay is that nobody has that bet on.
Yep.
So now I know everyone's on one ship at the side of the Titanic. I'm on the other side and saying, I got the lifeboats, guys. Yep. And we'll see how it plays out.
Well, that picture of your performance over time, I think people should really respect, when he gets out of things, like when you got out of UNH, and then when you put it back in. Like when something makes the turn, like you said, I see it now. You see it fundamentally and you see it technically. However, I'm assuming you look at both. I mean, most things that people own, this is essentially the problem people have with the S&P 500. It's like even after yesterday's rally, it's up 1. Okay, you can be long the Russell that's up like 8% in 2 weeks. There's a pretty big difference, even if you're only playing with index versus index. But what is it? 15 companies represent 40% of the S&P 500.
Yes.
I mean, so you're choking on Apple like every other human being in their 401k? I mean, maybe it is a good time to go borrow against that 401k and buy your first house, because if you own Apple, you're screwed right now. It's a 7% weight.
This year is going to be an absolutely incredible stock pickers year.
Yeah. I think it's awesome.
So fundamental relative value hedge fund guys, I think, are going to have an incredible year.
You think?
Yes.
As long as they don't have to run neutral, man.
Well, no, I'm talking about them. For their world, they're going to have an incredible year.
Really?
In their world, an incredible year is plus 10.
Okay.
Okay. For the most part, plus 10 is a huge number.
We're already up more than 10, and it's like game 14 of the 2026 season.
Yeah.
And it's like,
yeah.
Okay.
No, it's, and I can see it in the dispersion. There's a crazy dispersion that's happening right now, which is not abnormal for the beginning of the year.
Yeah.
But the dispersion at the beginning of last year was horrible.
Yeah,
there was no dispersion.
And then the market crashed.
And then the market crashed. So it was last year was very, very challenging. And what happened in that challenging year for relative value hedge funds, neutral guys, so many of them got fired. That's what sets you up for a much better year.
Yeah.
Everyone who was going to get fired did get fired. And it's really the liquidation of books that destroys the spreads. Because everyone does come to similar conclusions on what's a winner versus a loser.
Good company versus bad company.
And this is why the momentum factor is such a gigantic factor, the factor. But you have a moment right now where very long-term momentum is rolling, Mag 7.
Yep.
And that's like neutral book, that's like gravy train with biscuit wheels. This only happens like once every 5 years.
And it should, I mean, on our work, it should be happening. I made that, guys, you could show it as the chart of the day where we show where Mag 7 earnings growth peaked in the first part of 24. It had another reacceleration in the third quarter of last year with the most epic CapEx AI numbers in the history of CapEx numbers. And now it's just going to slow from here.
That's
so
right,
it's
the
like
cadence.
just straight down, like the middle chart there, Mag 7 income growth year over year. Whereas the Russell 2000, go to the next chart, guys. Look at the Russell. It's coming out of this depression. Negative 30% earnings is going to be somewhere between up 40 and 60.
So what's going to kill it? Negative momentum.
Yes.
And that's the factor. Losers.
Yeah.
Whirlpool. I like Whirlpool.
And I like Dover.
But like so many things. Yeah,
Emerson
you like
Electric.
Dover. I know. Oh, woo, 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 getting hot in here.
Go to the golf club and pitch that sucker. Yeah,
what?
When I go to Patterson Golf Club in Westport, anywhere in Fairfield County, if I go there and I start telling them I'm long Dover, they might be thinking I'm talking about something else.
I think so.
They're like, everyone owns. I was in Boston at this event for Ham, and one of the guys from Worcester, he runs a $20 billion RIA. Like we got a lot
have him call me, please.
Yeah, we have a lot. He owns PINK. Okay. But it's amazing. Everybody knows that everybody knows. He's like, you know, Keith, like everyone owns those 7 stocks and Bitcoin.
Yes.
And they probably own crypto, but they don't admit it anymore because it's such a disaster.
Yeah.
You know, they don't own like stock picking. PACCAR. Cat's a pretty obvious one, but they don't own Cat. Barrick Gold. I mean, these are large caps. The small mid caps are even, well, not even.
They don't even know what they are.
No.
They don't even know what they are.
Amazing.
They don't know TE.
TE.
Right,
Let's do
TE.
TE. We have to do TE.
Okay. There was a short report.
That's an expensive
There was
stock.
a short report yesterday.
No.
So that's why, yeah.
That's why it was, okay.
Well, I think it might be up already from it. But it's really great because I looked in it and I was like, who did this? You know, this is me on the keyboard. Who did this? And then I look and I'm like, somebody just bought 10,000 puts on the 750 line 2 days ago. And I'm like, okay, it's them.
And then they put out a
They
short
didn't
report?
make money. Oh, yeah. It's real classy. And it's garbage. Like the short report, it literally reads like an 8th grader wrote it. And I mean, not a good 8th grader. I mean, you know.
They could have at least used like Claude.
It was horrible. And it's like with crayon, you know. It's like, the CEO is evil. He worked for Renaissance Capital. That was the Russian investor. And it doesn't say it on his LinkedIn account that he worked there. And I was like, that was like 1994. I don't put stuff on my resume from 30 years ago because it's just, I can't fit it on, you know?
Josh Steiner, who is revered in the Hedgeye community for the right reasons, a man of principle, a fantastic analyst, he worked at Amaranth. Shh, we don't. Like, if they were to write a short report on Hedgeye, that would be the equivalent of writing that.
That's beautiful.
Like
anyway, so they wrote this short report on
that
TE.
he's a bad guy or
sketchy?
sketchy?
And this is still a Chinese company, and it's a Chinese fraud that's running it at like a shell. None of it makes any sense.
No, it's a solar company.
Yeah, but it used to be Chinese. They bought it because all the Chinese assets had to be sold.
But it's solar capacity.
And it's solar capacity. It's U.S. based. It's U.S. domiciled now. And in fact, they're speaking right now, as we're speaking, in front of a room of 300 people, probably saying some of the things that I'll say.
Oh, great.
Just to that effect right now. But anyway, so
but this is like the cheapest stock you own.
Yeah, it is. Yeah, it's really trading at like 4 times 20, kind of a run rate at end 2027.
Earnings.
Free cash flow.
Oh my
so earnings too.
God.
Yeah, free cash flow. But it'll really be free cash flow. And these trade on free cash flow.
The dudes at the golf course, they think 4 times 2035 revenues would be cheap.
Yeah, well, they don't even know what that means either.
4 times of free cash
So
flow.
it's cheap, and so I still think that this is a $20 stock. It was at $3 when we talked about it last time, and now it's around $8, and which is nice, But I'd really like it to get it should get to 20.
But does it have any coverage yet, like sell side coverage, or is
very
it
light?
Just starting to?
Very light coverage. It's not complicated.
Yeah.
It's solar. The good news is that we're in an energy bonanza that's not going to stop. And solar is the quickest go-to to get anything done. Any other plant that you build is going to take 3 to 5 to 7 years, depending on, is it nuclear or is it nat gas turbine. That's going to take time and regulation. Whereas solar, it's just land and batteries. And we're actually on the beginning of a total battery renaissance right now, where the whole thing is going to transition over to sodium, and that has a much better battery. So all these American domiciled solar panels that can be made will be sold. And there's really only 2 American players, First Solar and TE. And TE is the only one out of the 2 that can double and then potentially triple output.
Well, what's First Solar's earnings multiple for free cash flow multiple?
It trades at around 12 times.
Yeah, and this is at 4?
Yeah. I mean, that was why. Well, you said, what's a 5-bagger, Mike? And I was like, well, okay, how about this TE? I actually didn't, you just threw it at me right there. You're like, give me a 5-bagger. And I was like, oh, shit. Well, I didn't prepare for this.
It's a lot harder to find them now because the value, small, mid-cap has had such a huge run. I mean, you wouldn't call solar value.
Yeah.
But again, it's like they shot everything for dead for AI. And it's amazing. Like if I look at if I take a meme function in the algo and say, give me signal strength and rank them. You go sub $100 million miners, like the top performing stock yesterday next to NVIDIA in terms of volume that traded was a Zimbabwean gold miner.
Oh, top of my list.
Yeah, we're top of the list, right? I mean, so I showed this on the macro show. The ticker's NAM, and it's ripping again today. But it's just like, so you got that. You would say robotics and space would be in there. Solar would be in there. AI is kind of down here now. Like it's in there, but it depends on what part. Like there are epic blowups going on in software and AI right now.
Great for these relative value hedge funds.
Yes.
This is their bread and butter.
Because some shorts
that has never worked.
Yeah.
Everyone got fired, and now it works.
Yeah.
Classic. One of my good friends, and you know him, Jack Woodruff,
Yep.
at Candlestick, he shut it down for a lot of reasons at the end of last year. And not because his performance, there was a lot of other issues. And I called him up and I was like, you realize that your space is going to work like you cannot believe now.
Yep.
Consumer discretionary, which I am very bullish.
Oh my God.
First watch. I think you even talked about it today.
FWRG.
And like you said, Shake Shack. God, I hate that. I need to buy more. Right? Applebee's, let's go. So I think.
Well, I also gave you on that call. He's talking about he listens to the Hedgeye, the call we call it, the research meeting where you can listen in. And I reminded everyone, like when I talk about Oscar the Grouch and the garbage trade.
Yes.
Like garbage can work in quad one. That's why we call it garbage can. But you in 2021 is like I am long.
Yes, that was 21.
This is
massive
before the GameStop, everything.
Yeah, that's right. It was before it.
Why is it that just try to give people a quickie on, because you've worked with so many analysts, junior PMs trying to become a senior PM. You've seen them succeed, you've seen them fail. Why do so many make that simple mistake? I'm long good companies and I'm short bad companies. I went to business school and I know I can be short bad companies.
Yes.
Garbage.
Well, it's actually pretty simple. It's because they do analysis on the company rather than the stock. That's really it. You don't make money on the company, you make money on the stock.
You can have a great company like Costco that's a terrible stock.
Yes, and that's what they get wrong. And they do it, it's always this, always think about the setup. It's who owns it, who doesn't own it, and more importantly, who must own it moving forward. And that's different. Like, for instance, we're going to see a huge change in the Russell 2000 composition coming into June.
Yes.
When they reshuffle it, all right? And then that's going to be like very positive for a TE. very positive for a PCT.
Because they get added to the index.
Well, they're in the index. The
weight.
weightings go up as others get shuffled out. And so now they have to look at all. And that's why they're working right now, because they're looking at it. And what do I need to own into this June event? And that's why, like, for instance, a PCT, which is, in my view, going to fill their backlog this year, improve their business positive that it actually does work, and then go on to sweep the world in recycled polypropylene as the monopoly only player in the world. I mean, it's amazing. It's amazing.
On my signal, that stock looks as good as it's looked. If TE and PCT have the same fractal pattern, actually, it's actually just getting started on the breakout.
Yes.
People, that's another mistake hedge fund people make.
They sell.
I mean, the smart ones. I missed it. I can't look at this idea. It went from 3 to 8 TE.
Yes.
I'm not intellectually capable of buying it at 8. I missed it.
Thank God, though.
And then you miss it going from 8 to 20.
Yes.
And God help you if you shorted it.
It's just like what I did with silver. I went short silver last week in a structured fashion. Okay.
You didn't buy the ZSL.
And it was actually has a lot to do with that Trump was going to blink on Greenland. All right. And it's massive momentum factor, and I can't get the Citadel out of my head because I'm looking at all these winners in my book, and they look a lot like silver. And so I was like, boy, maybe I could spend $60,000 in creating a synthetic whatever in order to give myself some protection for that day when everything goes the wrong way.
And it worked.
No, I probably am going to lose $60,000 by the way. So that's, but this is.
But you tried.
But I'm like, and that's how running a book goes, in a neutral fashion all the time. Is that you're throwing money out the window so that you can go to bed at night.
Yep.
And in fact, Citadel doesn't allow their PMs to trade options anymore just for that reason.
Really?
Oh yeah, they lose billions of dollars on options every single year, and then one day it's just like, no, we're not doing that anymore. So you have to now get special permission to trade options at Citadel, and they make a lot more money for it. And that's Millennium's a little bit different, where they say, no, you're all independent businesses, you can run it and see as fit. Citadel, in a very different fashion, will throw mandates out there and say, no, collectively, you guys are all idiots, you're not allowed to do this. And so, yes, you'll lose an hour of sleep at night because you're so over your skis or whatever, you don't have puts on silver, but at the end of the day, we're going to make more money. An executive decision. And that's just a difference in the flavor of Millennium versus Citadel. One of the intimacies that I'm aware of, just because I've sat in both chairs.
Well, Citadel's culture, having worked in it, I mean, I worked at Magnetar, right, which is born out of Citadel.
Yes.
Their culture really isn't the one that you and I came from. Like, they don't, in their bones, like at their beginning of their creation or birth in the business, they're not stock pickers. They want everything to be arbed, boxed out, neutralized. Like, it was one of the great blessings of my career to work in that environment because I never was neutralized. Like, I never had limits. Like, I had capital limits, but I didn't have net limits. Like I always say, in 2003, I was up 81%. I didn't realize that, like, I'm sure X percent of the time I'd be like 59% net long or something, and I wouldn't even know. Because it wasn't our culture to be that way. It was like, if you have a big idea, put it on in size. And I was just really long. Yeah, exactly. And it was just like, to me, it's really helped me to understand the foundational captain stock picker breeding grounds, which are Dawson Sandberg. You pick any, like Tiger Cub, or born out of, your DNA. I put you in that camp, even though you ended up.
I should be.
Right?
I should be.
But Citadel and Magnetar, like, that's a very, these are, in some cases, risk arb guys.
What I find in those firms is that after you make $500 million of P&L, they will let you do whatever the hell you want.
Yeah,
not at Citadel, but at Millennium and others. And you can start, because then you're in a different realm. Once you're in that, like, top 3-4% of producers in the firm, like, consistently, that's a different person.
Yeah.
That understands the rules, but doesn't need the guardrails.
Yep.
Because they really understand
They
the
prove
rules.
themselves, yeah.
And they really know how to manage risk. And sometimes it costs you too much to manage that risk, the silver trade, for instance. And it will cost them and the firm too much to do it. And if you just let this person go, they're going to make you so much more money. And Millennium's very, very good at that.
Yeah. Well, I mean, I could see all of our clients' performance, right? I mean, and it's not saying anything positive about Captain Stock Picker or negative about somebody who's more, of the risk arb ilk. It's saying that if you understand all of it together, and then I look at the clients who do quantamental, which would be my best version of it so far, they've done a lot better. Right? They don't have to run neutral. They understand top-down macro. They understand flows. They don't start with their stock pick, and they don't start with the hedge. They start with what I just said, North Star. What's the signal? What's the quad? What are the sectors I want to have? What are my tilts? And then there are my stocks. That's what, I mean, I don't need to I actually can't name names because he's a brand new client. Huge. He's one of the best performing hedge fund guys on the earth. And that's what he does.
Speaking of those sort of flows, we have to be very cognizant, and I'm going to bring up Mike Green because his work, and he's a good friend, he's coming out with a big book, and now he'll be even more famous. That's all that we need is more Mike Green.
He's a really good writer.
Yeah, he is great. We talk almost every day. He's a good friend. But he thinks that we're close to the flows going negative on Vanguard and the passive flows starting to go negative, which will be dramatic. Maybe very slow at first, but will have a profound impact.
Said, it's interesting now that you say that. Like, if you tie, like, your ability to put a mortgage down for the first time to your 401k, that draws from Vanguard. Big time.
Only if you sell it. If you borrow against it, it doesn't.
Oh, if you borrow against it, you don't have to sell it. Just borrow collateral. That's the
M2.
Like until I say this.
M2 go higher.
This deal isn't announced. It's a hypothetical thing.
I think it's going to be more than hypothetical.
No, but it's not a thing that I should know. There's not like a piece of paper.
Yeah, there's no piece of paper yet.
Right.
There's no piece of paper yet. But the right people are meaningfully talking about it, and it is an asset. And it's actually good for the banks because there's a lot of collateral there, so they can be pretty safe. And it does create a big boost to M2 with a giant multiplier on it because it is going to be raw materials and all that sort of thing. And Whirlpool.
Yep.
I mean, Whirlpool's been in the toilet for 4 years.
Brings it back to Whirlpool.
Yeah.
Do it. But the Vanguard, I mean, if Mike's right on that, if this is the beginning of the end,
yes,
which it's all rate of change, it just has to get less good or less obviously bullish.
Well, this is what happened in Japan so 8 years ago or so, where the demographics went the wrong way. So we had more redemptions than adds to the Nikkei.
Yeah.
You can't have that. So they start printing money. And I took note of the Fed where he's just the Fed last meeting in December was the most outrageous thing I've ever seen in my, and you thought it couldn't get more outrageous. And the Fed is just so funny where they're like, yeah, we're going to print $400 billion. And they're like, why? And he's like, well, the jobs, the job number. And everyone's like, yeah, but the BLS numbers are all right. He's like, no, not those. The real numbers, our numbers. He literally says that, and I'm paraphrasing, okay? And I'm literally in my chair. It's like, anyone watching this? And he doesn't tell us what the numbers are, how he gets to the numbers, how long we've been doing these numbers, and how off it is to the real numbers or fake numbers we see from the BLS.
Yeah.
Drop the mic, $400 billion in new printing. Let's go.
Yeah. New acronym, everyone the next day, RMP.
I think we may look back at the December meeting as one of the most meaningful Fed meetings in many, many, many years.
Yeah. It's where he just admitted what everybody knows. Everybody knows that everybody knows.
There's been no follow-up to that, by the way. Nobody's saying, what are these numbers? Who's doing these numbers?
Questioning the Fed.
What are the numbers?
You lose access to the Fed if you question the Fed.
I suppose.
You know what I mean? But again, it's not, the whole concept that they're data-driven. You know who's data-driven is Scott Bessent. Bessent gets our inflation nowcast. He knows where the data is tracking, the actual data. And then he clowns the Fed. Like, he put the white hard hat on Powell and got him to cry wolf right before the CPI number surprised to the downside. Like, it's like, see, he doesn't know what he's doing. And it's not the point about what he did or didn't do with the building. You're being clowned with the building hard hat. It's that you're incompetent. You cannot tell me that inflation is not going down. That's what we think. Look at anything that Besson says. It is 100%, guys, show our inflation nowcast. It is downward dog. All these Wall Street and Federal Reserve kind of linked econs have to drop they're currently at 2.8 to 3%, which was 3 months ago, was the CPI level. That's the Wall Street estimate for the first half of 26.
I actually think it's downward dog and Lululemon see-through pants.
There you go.
So,
I mean, but Besson gets it, so he's able to front run. It fits politically, right? Like, these guys are so tone deaf. It costs $50,000 just to go to Davos. Like
70.
Just a ticket. Is it 70 now? Okay. You get a $5,000 charge on either side of a business class ticket just to get in. Then you got the hotel. And CNBC's flying in like, oh, look at all these nice selfies of all these. Look at Becky. Look at Joe. It's like they're spending millions and millions of dollars to go there, and Trump just hijacks the whole thing. All the news flow is gone.
Honestly, I have some friends that are there right now, and I was on the phone with them last night, and I was just like, you're gonna see Scott, give him a hug. He has the hardest job on earth.
That's the worst.
He has the hardest job on earth because he is in the process of unseating Xi. Remember, that's like $1.7 trillion Belt and Road Initiative. I'm going to tell you how much of that he's going to get back. Zero. None. Zero. Just gone. Argentina gone. Brazil gone. South Africa, that might be a little bit later.
Venezuela gone.
Venezuela gone. Cuba is, well, that doesn't matter, but that's probably going to have a revolution. Don't have food. I was just there, by the way, a few weeks ago in Havana. No food. No food. So you got to give Scott a hug because at issue, and maybe he'll get mad at me, I'm going to tell it, and I told him, like, okay, this is what you have to do. Because Trump, he's got his own thing, right? And he sets up a lot of policy on the fly, and Scott and Marco they're not in the office. They're not at the White House. They're doing their thing on TV, or they're over at Davos, whatever. And Trump will be at the White House. And honestly, I'm just like, every single time he goes to the men's room, and he's got the frickin' thing, he's just blowing new policy tweets on the thing. And so I was like, Scott, this is what you do. I have a solution. What you do is you got to set up a switch, get the IT guys to set up a switch so that when you close the door to the men's room, it shuts off the Wi-Fi. And it's going to make your job so much easier.
A lot easier.
And I see that he hasn't done it yet. So he has the hardest job. And it's so hard because the job of the Fed is to make the Treasury look solvent.
Yeah.
And this Fed, they don't like that. They're not playing ball. Yeah. So it's very, very hard.
Yeah, I had one guy in a meeting. I'll just say it. It doesn't matter at this point. Used to work with Scott. Current client used to work with Scott. Knows him very well. He goes, and there were other PMs at this New York lunch. You know how you have like a group lunch?
Yeah.
Because we had a group lunch. I was in New York. I was only there for the day, so we had multiple clients. And I don't think they knew who the guy was, like relative to his relationship with Scott. But I just opened it up, and we just started talking about it out loud. And he goes, I'm not going to use his accent or no accent, whatever it is. He says, I used to know, like, when Scott was lying, but now I can't tell at all.
Yes.
he's like, like when you work with somebody for, you get to know their tendencies and whatnot. So he's really become a chameleon, and has to be, because you never know what's going to change. I mean, it's just.
And yes, lying is a prerequisite.
Yeah.
And he adjusted to it very well. And I don't mean that as a negative. I mean it as a positive.
Well, you have to. If you are a politician in the modern era, you have to lie, because by definition, all the data points don't lie on your side of the story. I mean, you have to be able to. This is what makes MSM what it became, because these are high-end liars. Like, you have to really be intellectually capable to objectively ignore.
The word is sociopath.
I mean, it's like really impressive.
Yes.
And people wonder, well, like, why are these people so articulate? Well, they're extremely intelligent human beings.
Yes.
But us market people, we got to figure out who's lying.
And
We got to figure out when they're lying on purpose, like the Greenland scare, so
Yes.
that we can buy dips. We got to understand who is willing to believe what they're lying so that they believe for a short period of time so that then you can turn around and believe the opposite. Like, I love this.
when
This
is
like
it a game and when is it real? There's going to be fortunes to be made this year and next year. I'm really excited about the trading environment. I'm very worried about 27.
Yeah.
This year is going to be a lot easier. And I think that Hedgeye is completely on the money. And I encourage everyone who's listening to this to, at minimum, subscribe to the call and your macro show, because those are really the two big data points that you need to understand what's going on a daily basis. It's stunning.
Well, I appreciate that.
Stunning
I mean,
product.
one of the big things that we get out of that, people like you participating daily.
Oh, I have to say, I'm also a paying customer. So it's not like I'm a paying customer telling you that it's awesome.
No, thank you. I mean,
That doesn't mean that you should up your price, though. Okay. So,
but one of the best things about that is when you put yourself out there in truth space. If I get up in the morning, our call starts at 7:45. Everybody can listen in, and I don't know who's listening in. So it's one to many. If I lie, or if I say something that's not true that I think is true, which is also a lie, can be perceived as a lie, I immediately get feedback from Mike Taylor and 25 other people who know the right data point. That is, I would kill for that in my old seat.
oh, yeah.
In my old seat, nobody's telling me anything other than what position they already have, so that they're pushing their book. I mean, a totally different thing. Here, it's like an actual exercise in truth seeking that is truthful, that has immediate back checks on it. It's great.
It is great.
Like if we said something, if Tom Tobin and I were talking about UNH today, if we said something that you'd be like, no, that's bullshit, you would immediately tell us it's bullshit. Or look at this, and then you'll see it differently. And we will. Mm-hmm. It's not our job to find a narrative.
It's very powerful. Your investor base is incredibly powerful. Just getting that feedback, because all the brightest minds literally watch us, all of them.
Well, thank you for that.
And if they don't, performance is down, and that's it. So that's it. So it's really exciting, but it's such an exciting time in the world. A very difficult time. This demographic thing is not going away. This passive flow thing is not going away. It's only going to accelerate no matter what. And that's going to make stock markets even more volatile, much more volatile, much more volatile. Because when these passive guys are buying or selling, they can only buy from the active.
Yep.
And we are like just a diminishing bunch. And so just mathematically, their orders get bigger and bigger to buy or sell, and our ability to sop that up gets smaller and smaller and smaller. So the stock reaction just goes like this and explodes. Mm-hmm. And we're going into the parabolic mode now, where they are overwhelming versus what we can do as a buyer or seller to meet that. And so I expect that we're going to see a lot more printing. And that's why I said in these predictions here, what do you want to be gold versus, right? And I think it's including the dollar, but I think it's easier. It's going to be the yen, it's the euro, it's everything versus oil. And actually a really great one, at some point China's going to have to completely depeg from the USD. But it doesn't matter, they're all going to work and go. I can't even believe I'm saying this. This is like the first time in my life in the past year that I've been long gold, because it's happening. It's not, we're there.
Good.
We're there.
Yeah, yesterday the best idea was buy Zimbabwean gold, baby. Yeah. Well, thank you. I mean, this is a great environment for us. I think certainly for everyone else, because they get to listen in on it and whatnot. But I appreciate it. It sounds like we're going to have many more of these faster, more frequent.
If you insist.
Yeah.
It'll be fun. It'll be fun. We got a lot of blows and play-by-play, and there's so much. And so frequently, I need to come on like a couple days before something happens, so that we can actually articulate, because it always stinks when it happens the day before I come on.
Yeah, Tuesday would have been perfect.
Yeah, it would have been perfect.
Well, the last time you were on, you predicted it. It was a Trump, like
We
a
got
negative
so
Trump
lucky.
day, and
that it happened to be the next day and I was on.
Well, we could do it tomorrow. Maybe it might happen tomorrow. You never know.
We'll see.
I heard Prince Edward Island could be on the tape. It's a very nice island.
Oh, that's next?
Yeah, I mean, I'd go after Carney. He sucks.
Well, you want to get long Cuba if they have the revolution, because that is like.
That's nice.
And get short Bahamas.
Ooh, I'm long of Bahamas.
Sorry.
Now we've gone too far.
No, too far. Take that trade off.
You've taken it.
Shut up, Taylor.
Thank you. Appreciate it. He's the one and only Mike T. Now you know why I love him.